All right, in the weekend video, I'm going to take another look at gold and go over the pros and cons of this potentially, gold having potentially created or left behind the 8-year cycle low. And if that's the case, then we're now in the advancing phase of a new 8-year cycle, and I think this next 8-year cycle is where we're most likely to get our bubble phase in the gold market. So the first thing I wanted to take note of, this move from this peak here at almost 2100, it's kind of a double top from back in 2020. This is without a doubt the move down into the 8-year cycle low. So the question is whether or not that's finished. If gold has one more leg down, maybe into the spring of next year, and it breaks these lows right here, these pivots, and makes another lower low, then that would we would move the 8-year cycle low out to whenever that would occur, probably in the spring of 23. But I'm kind of the opinion, it's not 100% yet, but I'm kind of the opinion that this was the 8-year cycle low, and I'll give you my rationale. So first off, this was a clear intermediate cycle low, no doubt about it. I don't see anything in here that I could identify as a recognizable intermediate cycle low. So at that point, the intermediate cycle low could possibly, you could make a weak case that this was the intermediate cycle low, except we got a big problem in that it did not break this trend line here. So I think that kind of eliminates this as an intermediate cycle low. This did break that trend line, but a very weak rally, not even close to breaking this downtrend line. So I don't think this qualifies as a intermediate cycle low. And then we get a more powerful bounce here. This bounce does break this intermediate downtrend line. The one problem I had with this is it did not turn the 10-week moving average back up. It didn't hold long enough above that 10-week moving average to turn it back up, but it did break the intermediate downtrend line. So I could make a case that this was an intermediate degree bottom. This was a left translated intermediate rally, which is what we would expect during the move down into an 8-year cycle low. And not only was it left translated, it failed, and by that I mean it dropped below this pivot. So then, if that's the case, if we consider this as being an intermediate degree rally, then this has important connotations. And if the 8-year cycle low has been left behind, then we're going to start seeing intermediate cycles that make higher intermediate highs. And that is what has happened right here. This pivot came in above this pivot. So if this is an intermediate cycle low, then we have completed one of the parameters that I need to see to say that the 8-year cycle low has been left behind, and that we are now making higher intermediate highs. So that's one important check mark in the bullish column. All right, here's another important consideration. This is the longer term 8-year cycle decline downtrend line. That downtrend line has been broken. So another big check mark in this being the 8-year cycle low. So for me, to definitively say that the 8-year cycle low is now behind it, and then we got a couple other potential signs that would make me think that the 8-year cycle low has been left behind. One of them here is this rounded bottom in the minors. I would not expect to see that kind of pattern if this was a bear market rally. We've got something similar in silver here, this rounded bottom. We've also recovered these support zones that have been broken. So a couple of more considerations. Let me convert this to the weekly chart and I'll show you one more. All right, so this is the weekly chart and this is the 200-week moving average. In a bull market, the multi-year cycle low will often come down and tag that really long-term 200-week moving average, but it won't drop significantly below it, and it most definitely almost never turns it back down. If it turns it back down, then you've entered a secular bear market, as we saw back here in 2013. Price dropped below the 200-week moving average, stayed below it, turned that average back down. Secular bear market that ended in 2015, and we are getting our move down into the 8-year cycle low. So this is a new 8-year cycle, topped right here, and then we started to move down into that 8-year cycle low in earnest over the last year, and it has done what typically happens during a multi-year cycle low. It's come down to tag and actually dropped slightly below this 200-week moving average. So we've filled that parameter as well. Now, in a bull market, I don't really expect price to drop deeply below. I know a lot of people are talking about 1,500 and 1,450 before the 8-year cycle low is done, and I don't really agree with that. That would be more in line with a secular bear market starting, and I don't think that's the case. I think we're in a bull market. I think we're going to set up for the bubble phase in gold during this 8-year cycle. So all I really wanted to see was a test of the 200-week moving average. That has happened, slightly undercut it, broke this support zone, could not stay below the support zone. Another consideration. So like I said, again, another sign that we have probably put in the 8-year cycle low. That this break of support got everybody on the wrong side of the boat, everybody in the bear market camp, and then it couldn't hold. It was a false move, a bear trap, and then now we're considerably above this support and or resistance zone, which would now be support, but don't really expect it to be tested again. So back to the daily chart, and then a couple more points here. So I've been on record in the premium newsletter. I told people, I said I expect at some point that gold is going to break from the dollar, and it will rally along with the dollar. And that happened on Friday. Now, one day doesn't make a trend, obviously, but so let me zoom in here real quick. So you can see we've got a real battle here. As I've said before, the Fed is raising interest rates, are trying to fight inflation, so they don't want gold above 1,800. So every time gold pops above 1,800, we get these very quickly. We get an attack to try and drive it back below it. So big attack here. We got one for options expiration, but gold keeps trying to negate these attacks. And so, we'll have to see what happens next week, whether or not it can hold above here. And if it can get some upward momentum, then the banking cartel may just have to cover their shorts and give up. All right, so back to the bigger picture. So this is what I want to see. We've got, at least one higher high. If we count this as an intermediate degree rally, then we've got a higher intermediate high. I want to see one more, and this is where 1900 comes in. I want to see gold at 1900. That would put it above this pivot as well, and at that point, there's no more question in my mind that we have completed the 8-year cycle low, and then we're now in the advancing phase of the next 8-year cycle, and during the first half of that 8-year cycle, I think we get our bubble phase in gold. And so 1900, that's the line in the sand. If we go above that, I think it's game on.